I'm just going to film a little follow-up to yesterday's video because there's now a bit more information about what exactly happened with Robinhood and a lot of the other brokerages, the online brokerages. So just a quick recap, they closed and were unable to take more purchase orders on GME. They were able to do some sell orders, but nothing purchased. So the big theory yesterday that kind of had a lot of circumstantial evidence surrounding it was essentially that their market makers were exerting some kind of pressure on them to stop the trading from GME so they stopped bleeding money. So we're going to assume that Melvin Capital really did close out its short positions and that the people currently in the short positions are just other organizations or even individuals. And there's no reason not to believe this, just because I think Melvin Capital really did understand what a giant mess they were in, and so probably really did pull themselves out and offer a little bit of equity to Griffin and Cohen to bail him out, essentially. So this is essentially what actually happened, and what hasn't been widely reported yet is basically that it turns out the short squeeze did kind of work. Although it didn't actually affect the people maybe that everybody thought it was going to affect. So to really understand what happened, basically when you buy or sell a stock on a brokerage, there's a multi-step process that happens instantly. So typically what happens is the brokerage takes the order, right? Then a market maker is going to pocket the spread, which is the difference between the buy and the sell price. Then this will move on to a clearinghouse. The clearinghouse is where the actual transfer is going to happen, where the stock moves. So you can imagine it as like a million guys running at top speed, handing each other pieces of paper that have the stock on it, right? So until the clearinghouse actually does this transfer, which takes a couple days usually, someone has to fund it, right? Because these brokerages work by giving you money instantly. Or credit instantly, at least. So it takes a while to clear, just like if you were transferring large amounts of money to or from a bank account. So GameStop's incredibly volatile, right? There's a bit of risk involved there. There's always a bit of risk involved when you're doing this, in fact. So typically these clearinghouses are going to require just some kind of collateral, right? Typically, it's pretty small, actually, like 1%, a bit higher, depending on the risk involved that they'll see. Basically that means volatility. So in this case, the clearinghouses were looking at this impending gigantic shit show and going, we don't want to be left holding the bag if you guys can't cover this shit. So basically, they kind of required 100% deposit anytime these brokerages wanted to execute some kind of purchase for GameStop. So, they don't have that much money. Robinhood doesn't have that much money. Market makers don't have much money. They're all not that well capitalized in the U.S. So what does that mean? It means they have to put an end to GME buying and selling, right? So this gets even crazier when you take into account margin buys. So people were buying on margin, which means some people were buying on credit. And then it gets even worse when you take into account stuff like options, right? So options are super leveraged, which means you put in a little bit of money and take on a huge amount of risk, right? And so you can either shoot to the moon for your return, so you just go crashing into a ditch and end up just a very bad situation, bankrupt basically. So the Robinhood found that it couldn't actually provide the stock because of this sudden requirement for deposits. They realized they couldn't provide the stock if an option was exercised, right? Which means, there's a whole lot to talk about with options, but essentially the main thing you need to know about an option in this case is that an option is something that allows a person to pay a small amount for the right to buy a large amount of the stock. Now, what happens when suddenly there's no stock available? Well, the price of these options shoot up and the desirability of the options shoot up, and it means people are definitely gonna exercise these options, right? Because they can make a ton if GME is at a huge, huge value, right? So basically all these brokerages found themselves in this situation where they had no money, right? No money to do this with. So it was basically a liquidity crunch, right? So if you think back to 2008, this is almost what happened when Lehman Brothers was getting bailed out, and everything in the financial crisis was just destroying the U.S. economy, essentially destroying the markets rather. So if all the clearinghouses were requiring all these brokers to do this thing, and all of a sudden they're throwing all their money into helping people buy GME, that means they actually would not be able to execute normal purchase orders and normal sell orders, right? So essentially that would have just, like I said, clogged up the markets, created a liquidity crunch, and all of a sudden, grandma can't sell out of her funds or something to buy groceries. The whole system crashes, people lose confidence in it, and in a worst case scenario, there's like a run on the markets, and suddenly everybody's trying to sell, massive stock crash, and the people who get most negatively affected by this are not actually the big bankers, right? It's retirees, people in pension funds, people that kind of live off of this stuff. This is actually, if this had happened, this would just be like the worst year for old people ever, right? COVID, and then a market crash killing their pensions. So this could have been very, very bad. And, it was bad for these guys individually too, which is why they did this, like why they stopped purchasing. So one big argument that people probably make to say that these guys are lying, this isn't actually what happened. Well, they point to the fact that you could actually sell the stock on these brokerages, right? And also the fact that you could still buy GameStop in other countries and on a number of different brokerages like Fidelity and Vanguard. So people will say that's the argument against it, right? Well, the truth is this is actually not the case, right? So you could sell, but the reason you could sell is because when you sell the stock, right, the Robinhood and has possession of the stock, right? And so that becomes the collateral. They don't need money in that case because the clearinghouse will just be like, okay, well, we have the stock. You don't need any collateral, right? So they're able to execute those orders. They can't execute purchases because, again, they don't have the money. That's kind of the big takeaway from this, is that we almost had a fatal market crash tomorrow. So Robinhood's desperately preparing for tomorrow, since they kind of feel they have to at some point let people buy GameStop, and they have to deal with all these options that have been issued. So they've been getting bridge loans from banks, like huge ones. And Robinhood's still a private company, and they were planning an IPO. This is almost like their IPO now, because these bridge loans that they're getting, they're sacrificing some ownership. They're like agreeing to sell themselves to these banks for X or Y or Z. So they're not getting away from this scot-free either. Basically, everybody's hurting, although maybe not the people that Wall Street bets wanted to hurt the most. So what's the takeaway from this, right? One of the big takeaways is why was this even allowed, right? So I pointed out that European brokerages and some other brokerages were able to still execute purchases, right? Well, that's because these guys were acting as their own clearinghouses. Or in the case of Europe, because they are actually required to maintain a higher capitalization. So when faced with the prospect of GME exploding in value, these brokerages, these clearinghouses were much better prepared for this, right? And so why does this not happen in the U.S.? It doesn't work in the U.S. currently because there are just too many banks with too many rules that have been around for too long. And so yesterday I was saying that it's very likely that there's going to be some regulation down the road, right? Who long knows how long, but likely any regulation is going to be targeting some kinds of capital requirements, again, because that's ultimately what was kind of a big consequence of the financial crisis in 2008, was these capital requirements got boosted up, right? So the other big takeaway for me is why is this kind of short selling allowed? Again, I actually can't remember if I edited this out of the incredibly long video, but short sellers are short sellers, right? They're not all terrible. Well, the people themselves may not be great all the time, but they have a purpose in a healthy market, right? That's generally to target companies that are going to die or definitely going to die, right? And they're somehow, continuing along and taking capital from other companies that could potentially make better use of it from a societal perspective, right? The problem, of course, is when these short sellers start engaging in these kinds of shenanigans that or manipulating the markets and ending up killing companies before it's their time to die or before they can do a turnaround or things like that, right? So if you're looking at me like, well, I don't really believe you that short sellers are good, think about Luckin Coffee, right? That was essentially a gigantic scam. And who uncovered it? It was a bunch of short sellers, right? So that's the kind of incentive we're talking about for these guys, right? To go after these basically fraudulent or enterprises, right? And you've also got another company that I'm not really going to talk about too much now, but it's an EV company that may or may not be fraudulent that these short sellers also targeted. So they have their place, and it's not like everybody working at them is terrible. So it's a complex issue, right? Really, really complex. And unfortunately, a lot of times, because of their function in society, a lot of these larger banks can kind of get away with doing favors for these short sellers, that's maybe a topic for tomorrow. So when we're talking, what's the quick takeaway from all of this, the end result, right? I mean, this is an explanation of what happened, right? So if you're looking for prediction of what's going to happen tomorrow, I can tell you right now, the fact that this shit show happened today means that tomorrow is going to be even more ridiculous, and that potentially Monday is going to be even more absurd than today than today is going to be, right? So, if you're planning to buy GME, you need to be very, very careful. Don't bid anything that you are not able to lose, because this could potentially shoot way back down to like $28, I don't think anybody thinks GME is worth, $500, $5,000 or whatever. This whole thing's predicated on the short squeeze, right? But if they end up going bankrupt and all these different institutions go bankrupt, your shares are worth nothing, right? Because this whole thing's predicated on these places remaining solvent. But beyond that, right? There are plenty of institutional investors who are probably doing something, sneaky with GameStop right now too. And in that case, what happens when the millions and millions of orders go into these online brokerages all at once? They're all going to crash again. Like, they just can't handle or process that many orders all at once. So what's going to happen? They're going to crash. Who gets screwed by the crash? Individual retail investors who are unable to sell while they're not working. I mean, these larger institutions are able to sell at whatever number they want, whenever they want, a bit more easily, because they aren't going through these publicly accessible brokerages, right? So they're kind of holding all the cards. So while it is true that a lot of people that maybe are not quite so savory are going to be losing a lot of money from this, be very careful to make sure that you are not one of the people losing money alongside them, unless you're willing to go down in like a kamikaze attack on them, okay? Well, guys, well, that's all I have to say for now. Enjoy the markets today. Enjoy the show. Enjoy all the politicians crawling all over themselves to appeal to the people who get screwed over, inevitably get screwed over in some way by this, whether it's by the banks, by the brokerages, or by each other, when the last person is sitting there with GME stock that they paid thousands of dollars for, that ends up going down and being worthless. And congratulations to GameStop. Issue 50,000 shares and get some capital, guys. Well, That's it for now. Have fun, guys. Bye-bye.